Good morning, everybody, and welcome to the first SFI Live of 2021. I'm Jay Evans, I'm your host today. We're going to be talking to three people from Saffron Building Society today. So for the first time ever, we're opening up to just not criteria, but also underwriting questions today. So do submit your questions. It's a live webinar, so you can submit your questions all the way through in the chat box on the right. I'll work my way through them. Bear with us because they do flood in, so we will get through to them as quickly as we possibly can. If you've got any questions for Iain, Tony or Holly, please mark which person you would like to speak to. That will just give me a helping hand as to which one you're asking the question of. So before I do anything else, it's time for introductions. So Tony, over to you.
Yes, morning everybody. My name's Tony Hall. I am the interim head of mortgage sales at Saffron. I've been with the society now since July, but I have over 30 years experience within the markets. My role heads up all three of the society's group mortgage functions in terms of working with intermediaries, supporting our existing customers, and also with our open market option via Saffron Mortgage Finders.
Thank you. And over to Holly. Holly, why don't you introduce yourself?
Yeah, so I'm Holly. I work as the intermediary team leader at Saffron. I've been with there for nearly 6 years now, and I run the small team of BDMs that we have at Saffron. We're currently telephone based, but we're hoping that will change in the near future.
Very good. And finally, our first appearance for Mr. Iain Rashbrook. Why don't you introduce yourself, Iain?
Yeah, hi everyone. I'm Iain. I've been working within the underwriting department at Saffron for 5 years now, having previously worked in sort of a mortgage processing role and retail banking prior to that. So I work in a small team of 4 underwriters, 4 highly competent underwriters who have between us got many years of experience underwriting mortgages, and I've now been leading the team for about a year now.
Brilliant. Okay, well, as we say, this is a live and interactive webinar, so we are looking for your questions. They can be about products, they can be case specific without too much detail, obviously, but also, just any questions you want to put to the guys. It's a bit of an open forum for this first one of the year, so we'll be accepting all of your questions. We have received some questions already, so we'll work through those first. Just pop your questions in the chat box and I'll get through them as quickly as I can. So Iain, I'm going to start off with you. Why don't you explain the role of an underwriter for those of us that don't know exactly what it entails?
Okay, yeah, thanks, Jay. No worries. So fundamentally, the role of an underwriter is primarily focused on sort of assessing the risk of an application, which involves a full review of a client's financial situation. So things like their income, their employment, a review of their full credit profile, the serviceability of a mortgage, and ultimately their ability to repay their loan. So at Saffron, we sort of individually assess and manually review all of our mortgage applications rather than putting them through an automated system as such. So we can give basically like a human approach to our applications, which when we're looking at sort of complex income situations and complex applications, this can often provide sort of far better mortgage solution for the customers themselves. So we, as an underwriter itself, I will be ultimately looking to lend money by evaluating the total risk around that. Yeah.
Okay, brilliant. What should a broker know to try to help in the underwriting process? So think about the application process and all the, there's a huge amount of paperwork. What should they know to help you to make that process easier for them?
Okay, yeah, definitely. There's certainly some things that the brokers can help us out massively with. One of the key things is notes and supporting information around a case. If you're submitting a case to us and it's got something a little bit quirky about it, it's got something a little bit out of the norm, or it's complex in any way, the best thing you can do is put some notes onto the application or send us an email through to our mortgage processing inbox, which gives us a little bit more of an idea. And ultimately, that's going to help everyone, help yourselves, help us. and save us asking additional questions when we do eventually sort of vet the application itself. Now, other things that you can help us with are things like your bank statements. So when you're submitting your bank statements, it might sound silly, but submit your bank statements with and make sure that they've got showing things like the salary credits, the mortgage payments, the rental payments if it's their first-time buyers and things like that. You'll be surprised at how many people send us bank statements in and none of that information is on there. So it's just little things like that just to sort of bear in mind. Other things are things like if you're submitting a self-build application to us, we've got something what we call a self-build supplementary sheet. And what that does is give us a full breakdown of the proposal itself. And we can do a much more detailed decision in principle for yourselves and the clients at an early stage. So that is sort of a really sort of key part. Also, another thing that is really prevalent at the moment are things like, because we're going through obviously this pandemic and the COVID situation, if you've got a customer with you that has been furloughed or is currently furloughed, to save us asking additional questions and things like that, give us a little bit of information around that. So when they're likely to be returning to work, if they are, and things like that. So just a little bit of extra information around that. Again, use the notes on the broker portal, and that will really, really help us out.
You talk about furlough, so it's not a definite no just because someone's been furloughed, but you're looking for information as to when they're going to be returning back to work, the fact that the job is going to be there at the end of it, and a bit of security for yourselves, I suppose, to prove that's going back to some kind of norm. Yeah,
exactly. So, I mean, with the furlough itself, I mean, we will consider lending if a customer is furloughed. I mean, initially, we with the furlough scheme, we're initially looking to test affordability against their full-time income, and what we're doing is running a sense check against the scheme rules. So you're up to 80%, up to £2,500 as per the rules itself. Now, if the case fails based on the scheme rules itself, what we're looking to do is have a look at the type of industry that the customers work in, the role that they work in, and do an individual assessment on each case to see what sort of initial financial pressure that they might be sort of put under within that role. Other things that help if someone is furloughed are things like their wider asset base. So if someone's got, if someone is currently on a reduced income, but they've got property in the background, which is providing them an income, let us know about that, because that can again strengthen sort of an application itself, and things like that. Another thing that we do with the furloughed income is generally write out to employers for references, which ultimately adds a little bit more comfort around an application when we've got something a little bit more concrete from the employer.
This is going to be a little bit more complicated, but obviously self-employed have been affected quite dramatically during the pandemic. How does this work for them now? Obviously, they're going to have a drop of income due to the pandemic, but actually they might be rebuilding, successfully well over the last part of the end of last year and into this year. How are you taking that into account? How difficult is it going to be for them to get a mortgage based on last year?
Yeah, so the self-employed customers are trickier, certainly. And what we're looking for is, again, for the brokers to give us a little bit of a rationale around how their business is performing. So we can obviously look at accounts, and we would always request the last 3 years business accounts and things, so we can look at the performance of that. Over the last year, we would be then reliant on things like the accountants to provide us with a little bit of comfort around projections, how the business is trading at the moment. And ultimately, it's just about you providing us with a bit of a rationale around what the business is doing at the moment and how it has been impacted. And we'll again look at each case on an individual basis and go from there, really. And if we need any additional comfort, we'll speak to you.
I think that's a good point that's come up on previous webinars, the fact that it is a case-by-case basis, isn't it?
Yeah. So especially in these situations, everything's completely case-by-case basis. And yeah, we've got experienced underwriters that can look at that for you.
Brilliant. Okay, guys, if you've got any questions for Iain, pop them in the chat on the right-hand side, and we'll get to them. I've got one from Jonathan Smith. We have 2 large self-build mortgage applications with you at present via Complete the Packages, which seems to be taking forever in the underwrite. Can you give a guide, I presume it's a guide, to the present timing in getting this addressed earlier than we send anything into you, Jonathan?
Yeah, what I would say is if you can send the details through to Holly, or, then we'll have a chat later on and we can see if we can see where those applications are and move them on for you.
We've got some product-based questions, and I'm coming over to you, Tony, for this one, because it's about Brexit and the EU.
Okay.
So, first one, I think I know the answer to, but I'll let you answer it. Can you lend to an expat in the USA as part of a joint purchase with 2 family members in the UK?
On that particular bit, I'll have to go to Holly on.
Are we deferring, Holly?
Can you repeat the question for me, please? I thought I got away with it then. I was like, yes.
Can you lend to an expat in the USA as part of a joint purchase with 2 family members in the UK?
So if it's an expat buy-to-let and they're looking for a buy-to-let mortgage, then yes, that's fine, because we can consider them on the expat buy-to-let range. But if it's a residential, then it wouldn't be, because we don't have foreign income license to lend on affordability for US dollars. So expat buy-to-let, yes, do get in contact with us. Residential, no.
Okay. And this leads on to the one you can answer, Tony. Has Brexit changed your lending criteria for expats living in the EU, like some other lenders?
Yeah, I just want to say I could have answered the last one, but I just wanted to test Holly. It's early on in the day.
Wake her up.
Just wanted to keep her on her toes. So, regards to EU, you know, we run a very successful expat buy-to-let portfolio, and actually the majority of our customers are outside of the EU. However, the recent changes post-Brexit mean that for the foreseeable future, until it's clear how to engage with member states with regard to regulatory and all the financial requirements, we have reluctantly withdrawn our products from the EU member countries. So we have withdrawn from those products alongside now a number of other lenders who've come out in the last few days to explain that rule. You know, I understand that the government are looking at how to re-engage and how we can comfortably come back into this market. And as soon as we can, I'm sure we will. But right now, we're limited to outside of the EEA countries. And it's all clear on our website which countries that involves.
Okay, thanks, Tony. Iain, going back again, it's been partially answered, but I will ask Sam's question. Sam has said, sorry if you already answered this, but how are you treating self-employed clients who've taken bounce back loans and or SEISS?
So with bounce back loans, I mean, we see them as the government have obviously allowed people to take those loans. We're not necessarily penalising the self-employed for taking those, but we will factor that into our overall assessment of the application. And if we feel that they've been completely reliant on that, then it might cause a bit of a red flag there. But yeah, we'll look at it as an overall situation.
As an extension to that, Sam's just asked another question. Are you still considering day rate for self-employed clients who've only been freelancing for 3 months, providing they worked for the same industry beforehand?
As long as they've got 2 years experience, then yes.
Okay, Sam, I hope that answers your questions. Any more questions, pop them in the chat box. We're here for the next 45 minutes, so we'll be answering as many questions as we possibly can. Over to Barry now. So, Holly, I'm coming to you for this one. What is your criteria for residential interest-only mortgages? And he's extended to that. And so he's referring to interest-only sale of property as the repayment vehicle.
Yep, so for standard residential and non-retirement cases, as long as they've got £250,000 worth of equity, they can use sale and downsize. That does slightly differ on our lending into retirement product. So for any applicants that are already retired or the term takes them over their 75th birthday, if they want to use downsizing as the repayment vehicle, then they do need to go on our downsizing product. again, need to have £250,000 worth of equity. And as many of you may know, we do offer retirement interest-only mortgages for older borrowers too. We have a whole product range for them.
Okay. They're all available on the website, aren't they? So do feel free, guys, to visit the website if you've got any questions. We'll be giving out some contact details later. From Rajesh, just a few, Tony. What is Saffron's stance on European nationals residing in the UK for resi purchases?
Oh, I'll have a go at this, but I'm sure the other two will certainly put me correct. As long as they've got permanent residency status and are paid in sterling, I don't think that's a problem for us. Yes.
Yep. So they do need their to have been here for 5 years and have their EU settled status letter from the Home Office.
There you go, Rajesh. I hope that answered your questions. Keith Robinson, do you offer let to buy? I'm opening this up to the whole panel.
Yes, we do.
Can you explain?
I can explain. So yeah, we do offer let to buy mortgages. All we need to know is details of the onward purchase, and we of course offer buy to let and residential mortgages as well, so we can help on both sides really.
Okay, we've got some questions we had submitted before the webinar, so I'm going to quickly go through these before we forget to do them. Question in here, somebody saw in the trade about the green retrofit mortgage. How does this work? Holly, do you want to take this one?
Yeah, so the retrofit was something that we launched at the early part of last year as part of our green project going forward. So the retrofit is for mortgage borrowers that are looking to improve the energy efficiency rating of their home. So they take out an initial rate with us, which at the moment is about 2.67, and it is a 2-year fixed rate mortgage. And what they have, the applicants, they have to improve the EPC rating in the next 6 months by making small adjustments within their home. And if they have made those adjustments, so say they've improved insulation, changed the double glazing, all different sort of methods that you can do, then as long as it's on a band E or above, we'll then take a reduction for them. So we'll make the rate that they're on cheaper. I think it will go down at the moment to 2.57. And that would be for the duration of the mortgage as well.
Lovely. I'm going to come back onto the a few questions coming in on self-employed, so we'll come back to that in just a second, because there's one I just want to get rid of while it's here. So this is from Dave Donovan. Do you do holiday lets rented out through Airbnb or mortgage? I think I know the answer, but Holly?
No, not currently. Holiday lets isn't currently in our offering, but it is something that we are currently reviewing with a hope that it would be in our proposition in 2021.
Exciting times.
Yeah, very much so.
Barry's come back with, and Susan, a very similar question. Susan's question is, Iain, I'm throwing this to you. There's a client that works as a prop maker and is sometimes self-employed and sometimes PAYE. Will you look at his overall annual income?
So they're sometimes sorry, what does he do? He's
a prop maker, but he's sometimes self-employed, so that sounds like a fun job, and sometimes employed on PAYE. So would you take both into account as his annual income?
So we potentially would, and we would consider that. It depends on how long they've been doing for both of them for. So if, for instance, he's been self-employed for the last, 3 years or something, then definitely we can accept that. If, on the other hand, he's also been PAYE for a set time, let's say in the last 6 months again, we could potentially accept that. But I think if we could get a little bit more information around that, that would be really helpful.
There's lots of self-employed coming in, guys, so just bear with me. So Barry's asked, for self-employed, will you take an average of income or can you use the latest year only?
Yeah, so we have just made system changes very recently. So if there's been an increase in self-employed income year on year for the last 3 years, or if they're going on the self-employed product range into the second year, or if there's been a decrease year on year, we'll take the latest year's figures. But if there's been a fluctuation in their profits, then we will take an average. So that just for us was helping self-employed cases boost affordability. And then once it's in with the underwriters, Iain, you'll sort of agree, you take a full look at the accounts, sort of a real deep dive, and from there.
Yeah, I think we do obviously have our... Yeah, sorry, Tony.
Sorry, I was just going to come in on that and say, with all of these, if there is, fluctuations and it's a decrease, if you could provide the notes to explain why, and you think it's a reasonable case as to why we should consider something else, then I'm speaking on behalf of Iain, and hopefully he nods, that's something else we're happy to look at. We won't do them all, but don't stop not ringing us about that case, because we're really happy to look at them and understand the scenario.
Yeah, I mean, fundamentally, with all of these sort of things, is if we can be provided with a detailed explanation around the reasons for fluctuations and things like that, that will always help strengthen your application.
Sam's come back to us again. We're sticking with self-employed just a little bit. Do you consider gross CIS income?
Yes, we do.
Yep. There's several parts to this question. Do you allow first year accounts and last year if increasing? And lastly, do you consider net profits plus salary for limited company directors?
I'm happy to take this one. So yes, first years of accounts and latest years if increasing, we can take the latest year's figures. If they've got less than 3 years of accounts, they do need to go on our self-employed product range, which is available under our special situations section of the website. And for 100% limited company directors, or where both applicants make up 100% limited company director, we are able to look at the net profit after tax and salary for affordability.
Lovely. John Emmons just submitted a question. There are 101 different variations of how lenders approach consumer buy-to-let. How does Saffron treat this area? Anyone? Holly?
That's fine. Yeah. So consumer buy-to-lets we can consider. Yeah. Who can break first? So we can consider consumer buy-to-lets, and if they previously lived in the property, that's what we would deem as a consumer buy-to-let. So the accidental landlord scenario, and what we would look at is rental stress testing, but we'll also look at the overall affordability of the applicant to see that, you know, the rental voids and property maintenance isn't going to leave them in any financial difficulties, because it'd be kind of the first property that they've managed. I think I've covered that right, Iain? Yeah,
and just to add to that as well, fundamentally, yes, we will look at the affordability of the consumer buy-to-lets. If it is, for instance, a fail, that doesn't necessarily mean that we won't do it. It will just mean that we will have to look at the whole case a bit more holistically, in the sense of is there other mitigating factors that would help, i.e. have they got additional savings to cover voids and things like that in the background, and bits and bobs like that.
Okay. We have a question from Amir. We're back on self-employed again. So do you consider self-employed where income is purely from land and property, or where it's an additional income to self-employed income?
Yes, we do accept purely from land and property. That would insinuate that they're probably landlords of some description. If they are, they're professional landlords, we would accept up to 90% of that.
Okay. Would you consider any commission or bonus if an applicant is on maternity leave, performance-based?
No, go on. I'll let you go.
If we can demonstrate that they've got a history of that over the last, say, for instance, 2 years, based on their P60s and things like that, yes, we could potentially consider it. It would be interesting to know how they are still earning commission when they're on maternity leave. So that might be a sort of question that we would potentially ask yourself. So if we've got a reasonable explanation and the employer can perhaps back that up, then absolutely fine. We can consider that.
Brilliant. I hope that answers your question, Mark. We're going to be jumping around a little bit here, guys, I think, so just bear with me. I'm just going to go through the questions as they come in. So they're coming in thick and fast now. Damon has asked, as CIS contractors, will you take the last 3 months invoice statements and bank statements for assessment, or the last 12 months? If bounce back loan has been drawn but not used, can this be ignored?
I'll take the first half with the CIS. So the CIS workers go on our contracting product range. They do need to have 2 years minimum history within the industry, but we do require 6 months pay slips and bank statements and a contract of employment if they have one. If they don't have a contract in place, we'll then work off an average of the 6 months pay slips that we do have. Okay, and then I'll throw the bounce back one to Iain.
Yeah.
Drawn but not been used, can they just ignore it?
Yeah, I mean, ultimately, I would imagine he's probably the client's taken it for security purposes. So, yeah, we can take a view on that.
Okay, brilliant. Damon, I hope that answers your question. Over to Matthew. Would you consider an application from an applicant who's employed on a permanent contract but on commission only, so no base salary?
So
Is that aimed at me?
Okay.
Yeah.
If they're commission only, no, that is something that we would really struggle with. So that would be a no.
I've got an applicant who had 2 utility accounts went into arrears, one with British Gas status 4 in January 2020, Thames Water status 1 in July 2019. Would you accept them?
With utility arrears, we are more lenient with. So if it's, sorry, did you say 2020? What's the first one?
The British Gas status 4 was in January 2020, and Thames Water status 1 was in July 2019.
Yeah, I mean, with utility arrears, we could potentially take a view on that as long as the rest of the credit profile was generally acceptable.
That answers your question as well. Do you lend on HMOs, Holly? If so, would you allow the landlord to continue to live in the property?
Currently, HMOs are not in our product offering. Again, that is something that we are currently assessing for expanding our range. Hopefully, we will have some new products coming at the end of the month, but not on the HMO just yet. And even if we had it, the criteria was that the landlord couldn't live in the property. So when we do have it back, I don't think our criteria will change from there.
Barry's back. Barry Harris again. Do you consider regulated buy-to-lets, and if so, what is the criteria, Holly?
Yes, we do consider regulated buy-to-lets. That goes on our standard product range, and we don't look at rental stress testing. We look at affordability of the applicants to see that it fits on affordability, and we don't take any of the rental income that they receive into account.
We're going back to Grant, another Grant question from Robert. Iain, I'm directing to you. Would you ignore SEISS grant for self-employed that actually worked throughout COVID?
So for self-employed that worked throughout COVID, it would depend obviously again what industry they work in. But yeah, we could potentially ignore that as long as the business hasn't been materially impacted that much through it. Okay.
I'm going to leave this open to the panel. Put your hand up if you want to answer it. It's quite a long one from Cheryl. Can you do a buy-to-let for a UK national who's only back in the UK 6 months, wants to remo his let property? He's self-employed, so only demonstrable income is rent until 2021 is due. Client wants the funds to buy a residential.
So if they only have one buy-to-let, and they've only got rental income, because they'll be moving into it, that income would change. So I'd say they definitely need to wait until they got their 2021 accounts. And from there, we can have a look at them maybe on the self-employed product range. But as it stands, as I'm reading that, it wouldn't be something that we could consider.
Okay, Paul Sims, are you lending to portfolio landlords, and are there any restrictions? And can you lend to limited companies? Tony, I'm throwing this to you and Holly. So Holly, do you want to answer the first part?
Of course I can. So portfolio landlords we can consider. Again, on our standard product range on the buy-to-let, formal mortgage buy-to-let properties will deem them as a portfolio landlord. And what you will be looking at is that the assets that are in their portfolio that aren't financed by the society cover at least 125% of their pay rate, both individually and collectively. We don't have any limits to how many properties that they've got in the background. And our limit with us is £1.5 million worth of borrowing, or 10 properties, whichever one works. But yes, portfolio landlords. And if you have got a portfolio landlord, there is 4 additional documents that do need to be submitted, and they can be found under the buy-to-let portfolio landlord section on the website.
Thank you. And Tony, I'm throwing over, can you lend to limited companies buy-to-let?
Today, no, but very soon, yes. We are in the final processes of. So we used to do it. We withdrew as last year because we were too successful and had to balance our books a little bit. We came back into buy-to-let in November, and with always a plan to get limited company back out there. So I would imagine end of this month, expect to see an announcement that we're going to be back in this market.
Well, shall we just make an announcement right now? Our next, our next webinar in February is going to be all on buy-to-let across the range. So maybe look out for the date for the next webinar to find out if that product is available by then.
Yeah.
Okay, next one. From Dave, Iain, I think this is for you. Minimum credit score is 600 with a verse. Does this only apply to one of a joint case, i.e. does just one need to be 600 plus?
Yeah, so what we see is when a credit profile comes in, we see a collective score. So if it's a joint application, it will give us a collective score that will need to be over 600 for it to meet our minimum criteria.
Okay. I'm sticking with you, Iain, from Damon. What's the criteria for an ex-IVA client? So they registered in 2016, but discharged from it in 2019, but it's still on their credit file. What's the maximum LTV on these clients as well?
So we don't necessarily have a maximum LTV. It must have been settled for a minimum of 2 years before applying for an application. So as long as it's been done for 2 years, then that's okay.
So it was discharged in 2019, as long as the anniversary is late 2021, maybe? Yeah.
So if it's early 2019, we'll be coming up to that now.
So Damon, I hope that answers that question. Any additional questions of these, we will be giving out contact details at the end, so do feel free to give us a shout if you'd like that information. So, Holly, we come back to you with Paul. Thanks for the response on our portfolio landlords. The case I have in mind is failing affordability, but client has significant portfolio and assets. Will it be acceptable? Might be Iain.
So, yeah, it might be more of an Iain one. So, I mean, for failing affordability, please do check our 5-year fixed rate does have a really generous stress calculation. So it'd be 140 at the current pay rate, which on the product is currently 3.67. And I'll throw the significant portfolio and assets question to Iain, if you don't mind. Sorry.
So is this for a regulated buy-to-let? Sorry, are we? Okay, sorry, I haven't got the question in front of me.
Portfolio landlords.
Doesn't say.
No, it doesn't say.
Okay, I mean, ultimately, if the client has got other assets and things in the background, that will always strengthen the application. If there's additional income that we can take from that, we could potentially factor that into account for affordability as well.
Lovely. Question from Adam Jollies. Client moved back to the UK a year and a half ago. Has been working as a contractor since then. Has now landed an employed contract with the company he was contracting to. So he's gone from working to them to working for them. We want to borrow 85% LTV, age of 59. It'd be good to do some sort of mortgage on interest only. Is there any chance to use pensions as a repayment tool?
Yes, so I mean, our current residential range is capped at 80% loan to value. Again, that's something we are hoping to amend in the near future, to really go in line with the market, as we're seeing other lenders come back at 90%, not just for first-time buyers. For our interest-only policy, they will be restricted to 70% loan to value, and for part and part, again, they'd be restricted to 70% loan to value. Am I right, Iain?
Yeah, correct.
Yep. So you're sort of limited on that one if they want to do a part and part mortgage, and we can use a variety of different repayment vehicles, including pensions. We just need to know about the type of pension, and then we can work from there as to how much of it we can and can't take as a repayment vehicle.
Lovely. Paul, if you have any connection issue, there is a refresh button. It will refresh it. It normally fixes the problem. So if you are having any issues, just click the refresh button. If anybody else is having the same, just refresh your feed and it will sort itself out. It'll just put you back onto the server. It might be a dip in your home broadband or work broadband, depending on where you are. So just click a reset and it will sort itself out, I promise. So do that. And if you want to submit any questions, then you should be back in the chat room. Question from Barry again. For someone 55 years old, What's the maximum term on a residential purchase, Holly?
So for a applicant with a non-manual job role, we can take working income up to their 75th birthday. If they have a manual job role, we'll cap it slightly at their 70th birthday. So it just depends on their type of job.
Or retirement, whichever one's earlier.
Yeah.
Okay. A question for Stephen, unusual one. Client works in a local RAF base for NATO, but this section of NATO is paid in euros. Would this be acceptable? Iain, do you want to say that?
Yeah, so unfortunately, we don't take any foreign currency income for affordability purposes, so we wouldn't be able to accept that one. Sorry.
Okay. Oswald's back again. Arrangement to pay on credit through Amex till October 2020. Since then, status went to OK. No missed payments. Is it acceptable for buy-to-let applications? Iain?
Sorry, could you repeat the question again? Sorry, Jay.
Arrangement to pay on credit through Amex till October 2020. Since then, the status went to OK. No missed payments. Is it acceptable for a buy-to-let application?
So if they've had any arrangements within the last couple of years, that won't necessarily go in their favour. So, I mean, by all means, I can have a look at the credit report and things for you, but my gut feeling is no on that one.
Okay. Let's talk credit for a bit, because we've had quite a debate on consumer webinars that I've done over what we see on our apps compared to what you guys see as an underwriter, Iain. What you see is a full report. What people see as an app can be not very different, but they're slightly different. So you can get a skewed sense of where their credit file is. What is the difference between what we all see on our Experian app compared to what you will see in the report?
Yeah, so there is subtle differences. We will see a very detailed report, which will break down everything from credit limits to available credit to your last 6 years history and things like that. I mean, ultimately, when we're looking at a credit report, we are looking at all different factors when for things like their overall payment profile, their the amount of available credit compared to their limits and things like that. But they're not that dissimilar, in all honesty. But we do see a very, very detailed report.
Okay, questions coming in from Peter. What is your lending policy on high-rise flats and also flats with cladding? Who wants to answer this one?
Yeah, I'll take this one. So we do have a limit on the number of stories that we can consider. So it's between 5 and 6 stories, I believe. We do consider higher rise in city centre locations, just depending on the property itself. And if there is cladding on any flats, they do need to have the EWS1 certificate.
Okay. From Hasnain, this one's quite a very case-specific one. I think feel free to answer, put your hand if you want to answer it. So, client bought a buy-to-let property about 4 months ago on cash borrowed. Some amount is borrowed from friends and family. Now he wants to remortgage to pay back the friends and family the money. Second, the property is next door to his residential property. Is this an acceptable case to you?
So they will need to have owned the property for 6 months prior to remortgaging it with us. I'm not too concerned that the fact that it's next door to their current residential property, so that shouldn't be an issue. But once your 6 months is done, we will consider the application.
Okay. Question submitted prior to this was what everyone wants to know about the two new first-time buyer products that you've just released. Holly, do you want to give out the criteria on what the new products are?
Yep, so we have 2 products available at 90% loan to value. Our first-time buyer criteria is that they've never ever owned a property previously, and it's pretty straightforward. It goes with our lending policy, so it's available to employed or self-employed applicants that have 3 years of accounts. It needs to be if there is any adverse, it does need to be within our policy. But always review it and refer it back to us because we're happy to sort of chat through the cases. But yeah, it's a pretty standard policy product, and it's had a good uptake before Christmas, and obviously still plodding along with us now as well.
Excellent. Tony, just I feel like you should have had a bit of an easy run here. So talk to us about gift deposits. Can people use gifted deposits on first-time buyer products?
Yes.
You're not going to have it easy.
No, we're very happy for gifted deposits from close family members. And we, if you look on the website, you can see what we mean by a close family member. But it does broaden to foster parents and adopted parents and people like that as well. So it's a broader list. But we're very happy across all our product range to accept those.
Brilliant. Just going to move over. We've got a handout that everybody that's still live with us, we can send across to you. So we'll automatically download your system. But I'm going to put it on the screen now. It's just some tips that Iain's put together. So Iain, should we just work through these and just go through them with the guys that are watching, just so they can see, some good tips from you on how to make the process easier for you guys. So let's just put this on the screen. So these are your top tips. So these have been compiled to help with the application process. Should we just work through them and then I'll send them to everybody that's viewing?
Yeah, absolutely. So when you are submitting your applications with us, just please make sure that, especially at DIP stage, that you're including things like your student loans, any childcare costs and school fees, and any things like season tickets. So these are key deductions that we will use when calculating affordability, and they are often missed off cases. And then as soon as we see a pay slip, we will identify them and potentially restrict affordability. So those top three are sort of key ones, just to make sure that are put onto the DIP when you're submitting things. The next one is about the bank statements. Now, make sure when you are submitting your bank statements, make sure they are showing the key salary credits, your existing mortgage and rent commitments, and your general sort of household expenditure, because they're the statements that we want to see fundamentally. If self-employed, please ensure that you're uploading the business bank statements. So what we're looking for self-employed is the client's personal bank statements and the business bank statements showing the general turnover of the business. Okay. The self-employed, again, I touched on it a little bit earlier on today, but the supplementary self-build information sheet will be absolutely key on those, and we'll need them on everyone, so we can do a detailed deep dive assessment on the project itself at an early stage. The assets and liability sheet. So if a customer's got more than sort of one buy-to-let or an asset in the background, upload that assets and liability sheet, which can be downloaded from the website, and that will just give us a real nice broad view of all their background assets, which will hopefully strengthen an application. And just the last thing on there, if you've got a customer that has been impacted by COVID prior to the application or during the application, please just let us know, because we will be asking the questions as soon as we sort of see the pay slips on those. So yeah, they're just a few little tips that will help us and help yourselves.
Can I just add something, Jay? I just add something to that on bank statements. Obviously, Iain's quite rightly said there, please make sure it shows your salary and commitments. One thing we do find is where there's sometimes a large credit or debit on an account, and it's not obvious as to what it is. If you've got those, then do provide us a note to tell us what that is, because that just helps the underwriter in either having to question that more or remove it from the conversation because it's understood, if that makes sense. Iain, I hope Iain, would you agree with that? Yeah,
absolutely. And especially with things like if you've got a customer that's clearly got a large credit in that they're going to be using for the deposit, for anti-money laundering purposes, we really do need to know what the source of those funds are. So just a little bit of an explanation around those credits as well.
Thank you.
Brilliant. Thanks very much, guys. I am sharing that document with you. With a bit of luck, it should come through on the chat when it comes through to you. So it is in the process of sharing. It's thinking about it now. In the meantime, we've had more questions in. From Christine, self-employed, will you take income from the SA 302 or from the last 3 months bank statements? So
that'll be from the SA 302s. Yeah.
Holly, we come back to you from Robert Quinn on the cladding EWS1. Have you found many issues with valuations post-certificate? Natural for surveyors to be cautious, flat owners to be less so.
I'll actually throw this one straight to Iain, just because he sees the valuation process and the valuer's comments, so we're definitely better be placed to answer this one.
Yeah, so for any high rises and buildings with cladding, we are finding the valuers are coming back and always requesting that the form itself. Now, we have had issues where we have had to just simply decline them because the forms are unsatisfactory and the cladding isn't up to scratch. So yeah, it is causing issues at the moment, and I know there's a lot of poor press out there about the cladding issues as well. So yeah, it's a challenge.
Brilliant, thank you. Just to answer your question, Fiona, we will email it out to you. Don't worry, we'll send an email the PDF out. It should be sharing. I don't know what happens on your screen, so I can't see because I'm on the presentation screen. So it should be sharing the file. If it's not, we'll email out to everybody at the end of this. So if you do want a copy, just pop a quick hello in the chat, and we'll make sure you get a copy sent over to you, or we'll make it available to you. Okay, so a question for Philip: what about pension payments for affordability? Is this a commitment, Iain?
No, we don't include that as a commitment. So deductions for pensions, we would not include that within affordability.
From Mark, would you accept gifted equity from a natural parent along with a step parent, Holly?
Yes, we would.
And it can be adopted parents as well, can't it?
Can be.
Question I've heard before, so I thought I'd check that quickly out there. The pension state, you can see the PDF, so fingers crossed everyone else can download it, so feel free to download it from the chat. We've got just a hello this time. Amir's asked, are we able to access Saffron direct?
So at the moment, you would need to go through a mortgage club or network. Alternatively, if there isn't any on our available list, then you would need to go through a packager. But that is all under the key partners section on our website. There is a breakdown of all the clubs and networks that we currently accept, as well as a list of all our packages that we deal with too.
If for any reason you haven't been on the website since last year, it has had a massive update, so there's loads of information on there. So yeah, go across and have a look. Thank you. Keep your questions coming. We've still got another 12 minutes left, so we've got plenty of time to answer your questions. Philip, we will get an email out to you, don't worry. Philip's also asked, is cladding an issue regardless of the height of the building?
It can be. So even if it's, I don't know, 3 stories high, if it has got combustible cladding on, it will be an issue, potentially.
Okay. Okay, so from Paul, I'm opening this up. Actually, I'm going to throw this to you, Tony. Any imminent changes planned to the JBSP concept product?
No. Quite frankly, I said what we're really keen about here at Saffron is to understand from our customers, the brokers, what's missing in the market. So our product is performing, in the market that we want it to be in. We're seeing good support with it. We talk about it all the time. In fact, I think Holly's got a session next week talking about that on another webinar. So we haven't got any changes planned, but if Paul wants to drop us a note as to what thoughts he's got, then that would be great. Happy to take those. Okay. The questions started to come in. Everyone's realised the time's running out. We've got some late arrivals, so bear with us, guys. I'm getting through your questions. Tracy's asked, do we do Expats? We know we do, so I'll answer the rest of the question. If yes, they have a buy-to-let flat in London above a small cafe. Is this suitable, Holly?
So above a commercial property, they always need to be referred over to us, and a cafe would not be one that's acceptable. Iain may say different, I'm not sure, but as far as high risk commercial, just because of the customer traffic and
yeah, again, it's like all these things. If it's in a really, really nice part of London and the cafe is we could potentially take a view on it. It just depends on the overall situation and things. So yeah, send the details through to Holly and we can have a look at it.
Okay. Jonathan just messaged, saying hello, Iain. Jonathan, if you send the details over to Holly, then Holly can pick it up with Iain. So there's 2 case-specific things to talk about there. So just send that across. Jonathan,
I've just received your email, Jonathan, so I will have a look into that today for you.
Brilliant. Is your JBSP just for first-time buyers? If so, do you think you'll review this?
It is just for first-time buyers. I'm not sure what the size of the market is on that, but we will take that one away. I'll take that one away and we'll discuss it.
Philip, if you want to email Holly, they can respond to you directly on that query if there's any changes or anything that does change on those. Just back onto buy-to-let, there was a question earlier that I completely missed on whether or not you can be a first-time landlord.
Yeah, so the product is available. Both the expat and the standard buy-to-let product is available to first-time buyers, first-time landlords. So we're flexible on that. It's quite on both of the products. I know I'm maybe a bit pro Saffron, but it's a really good product. And looking at where we are, the criteria is quite flexible, especially with our expat buy-to-lets. I know for us, we reluctantly stopped lending in the EEA regions currently, but we do consider the rest of the world. So always refer it over those quirky countries we can still consider.
It's quite strange, since we're talking about expat buy-to-let and EEA, it's quite surprising how much of a percentage of expat buy-to-lets are actually outside of the EU. The majority of them are in larger countries elsewhere in the world, aren't they? So I think people are a bit shocked that the percentage is that high. So it's been, the questions are flooding in at the last second. As well, I don't know who wants to answer this, so I don't know if it's Iain or Holly, but I'll let you know. You can let me know, sorry. New home warranty has been provided by Protect Structural Warranty for a custom build. Is this acceptable?
Yeah, so we'll accept Protec as a warranty provider.
Brilliant. So I hope that answers that. Sorry, Simon, I don't know if I did miss your question or not, but question: the client bought land cash and has built a property to use as a buy-to-let. Now needs to raise funds to repay the builder and replenish his own funds. Land will have been purchased over 6 months ago.
So we would go, and correct me if I'm wrong, Iain, but I believe we'd go off actual completion date, so when the building's been signed off. But I could be wrong. So I should have let Iain answer this one straight away.
Yeah, I mean, as long as they've owned the land for longer than 6 months, then we would be prepared to have a look at that one, I think. Yeah. Okay,
Simon, I have to ask you a question. Do you have a minimum income from Des? Do you have a minimum income on buy-to-let mortgages?
Shall I do this? Yeah, 25 grand.
I say that again, we all
Tony knows.
Taking the easy ones.
I'll throw you under the bus at the end, don't you worry.
Yeah, no worries.
So from Paul, JBSP concept is restricted to a number of borrowers and LTV. It would help the LTV could be staggered and additional family members added to the application. So I think that's more of a statement to you, Tony, based on what we were talking about before.
I would say, Paul, drop the BDM inbox or Holly a note on your thoughts, and we'll pick it up from there. Okay, we'll have a chat about what else you think we could look at. So really keen to do that.
For those of you that haven't received the file, it is sharing. I don't know where it shows on your screen, but it is sharing. If you click on it, you should be able to download it as a PDF. But if not, we've got the full email list of everyone that's been viewing today, so we will get those emailed over to you. I'll ask the team to email these the tips as quickly as we can. Last chance for any questions. We've just got 5 minutes left, and I've not got any questions. So Tony, here's the bus time. Just as you took a sip of drink as well. Why don't you talk about what Saffron plans are for 2021? Obviously, we've just started a brand new year. It's been a volatile previous year. What's the plans for Saffron for 2021?
Well, to continue on with the success we had in 2020. We actually we had a very, very good year. Our plans this year are to really make sure that the market understands our proposition, that we are a specialist lender, whilst we do also support people without those specialist needs. Our focus is on supporting those customers that struggle to gain mortgage finance through traditional lenders. So we are, we've orientated ourselves to be a common sense lender. You've heard from Iain today, and a number of times he said we'll take a view on that, which is really refreshing to hear. And I know all the underwriters do that. So it's about ensuring that everybody knows that whatever your case is, give us a call. Okay, we'll give you an honest opinion on it. Now, we won't always say yes, and we'll never say that, but we will give you a decision as soon as we can. Now, with our kind of lending as well, and this goes back to one of the comments earlier about time it takes, with our approach, which is using technology to get a case to a human being to take a common sense opinion, it can take a bit longer at times, and we are working on that. But sometimes we have to ask more questions because we're trying to say yes to a case that people have said no to somewhere else. So when you're in that, you just understand that scenario for us. But we are really focused on having service that stands out. It's one of our key objectives, and standing out for the right reasons, obviously. So big driver this year is around ensuring that more people know about us, understand how we can help, and that we deliver the outcome in the quicker and speedier fashion.
Brilliant. Well, thanks, Tony. So Holly, it's come to you now for the end of webinar contact details. So do you want to give out the telephone number and the email address for the BDM team?
Of course. So our telephone number is centralised at the moment, so you get through to either Debbie, Sophie, or myself. And our number is 01799 582 925. And our email address is bdm.inquiries@saffronbs.co.uk. Again, they are all available on our website under the Contact Us section. And there is also a form on there that you can submit your inquiry to, and we'll come back to you directly. If you can't get through to us on the phone for any reason, as at the moment we are quite a small team, so when we've got high volume traffic, you may just have to leave a voicemail. Please always leave your name and telephone number, and we'll aim to get back to you in under an hour.
Brilliant. And so anybody get everything, all the information on the website. The previous webinars that we've hosted are also on the website, and the links are there as well. So go and have a look at some. We've got some on JBSP, on Expat Buy to Let. There's some brilliant stuff on there. We are back every month for the whole of 2021 with a new theme that we'll announce at the end of every webinar as we go through. So as we've already discussed, our next one, Tony, is on
Buy to Let.
Across the
with a focus on limited company, which will be out hopefully as planned by the end of January.
You heard it here first. So straight after this, you'll receive an email from us letting you know the date of the next one. Do register. We are looking at ways of providing you with a certificate. So that's our plan for 2021. So you can put this against your professional learning. So we will get that sorted out for you, so you can actually say you've been attended. Thanks so much for your questions. It's been really helpful. And again, thank you to newcomer Iain. Well done. Not bad for you. Very well done. And thanks to Tony and Holly. And we'll see you in February.
Thanks, everybody.
Thanks,
Take care. Bye.
Bye.